its total assets are 120 billion. Let's just say 100, assuming it's a bit overvalued, 100 billion. Now, what is that? Just to give it a sense of magnitude, the British defence budget is about a third of that. We got very excited about the Millennium Dome, the waste of money on the Millennium Dome. That was less than 1 billion, so we're talking 100 billion. In those terms, it's big money. The sum of its borrowings and its deposits should be roughly equal to its assets, which are predominantly in the form of mortgage loans. Northern Rock tried to expand very rapidly in the early part of last year. It got up to something like 20% of the British mortgage market. They were giving people mortgages 125% of the value of property, 4 or 5 times people's income. I mean, this was reckless behaviour, and it was financing this expansion not by deposits, which is the way that most banks do, but by borrowing in international markets, in the so-called wholesale markets. And then in the summer of last year, we had the credit crunch coming in from the United States. Those markets dried up. It wasn't able to keep borrowing, it ran short of liquidity. People started to panic, they queued up at the door, they didn't know what was going to happen to their savings, and you had a classic run on a bank. It was, I think, primarily a case of incompetent, reckless, greedy, if you like, managers in the first instance, a failure of supervision by the people who were regulating them in government, the so-called Financial Services Authority, and then external events that they had no control over, which led to the liquidity drying up. The drying up of the international wholesale markets meant that banks no longer trusted each other. They weren't willing to lend to each other. And part of the reason for that was that some of the key players in the financial markets, like rating agencies, were not behaving properly. They were giving what are called AAA ratings, high quality ratings to financial products, because they were being paid fees by the people who had asked for them to be valued. So there were conflicts of interest. And so the whole financial community has come out of this looking pretty sick, and the reputation of the city has been damaged. There were 2 issues. One was, do you protect the depositors, the savers? And the answer, yes, you had to do that, because otherwise the panic would have spread to other banks. The second issue, which is much more controversial, is that should they then have lent money to the bank itself to save the bank, to save its shareholders? Well, why should we be saving this bank? I mean, we protect the shareholders, protect the depositors, sorry, but why do we need to protect the shareholders? But anyway, the government took the view that they couldn't take the risk of having a bank fail, so they started pumping in large amounts of government money. This rose and rose, eventually got to 25, 30 billion plus guarantees. And once the money had started going in, the nature of the problem changed. The issue then was, well, how does the taxpayer get his money back? And once that question became the real issue, I think not very many people initially, but certainly I and my party were arguing for the public ownership of the bank, to get effective control over it, to ensure that taxpayers' money was properly safeguarded. Nationalisation means that the state takes over the assets of the bank. It removes the shareholders. It is owned by the government, owned by the state. And of course, 25, 30 years ago, this was quite a common practice in the UK. Electricity companies, gas companies, airlines, steel companies, coal mines were all owned by the state. They still are in some countries. France is more state-owned than Britain. But certainly under the last Conservative government, most of the nationalised industries were privatised, and we have very little state ownership left. What we argued for was not nationalisation for sort of dogmatic, left-wing socialist reasons, ownership of the means of production, distribution, and exchange, but for entirely pragmatic reasons, that this is the only way of safeguarding the taxpayers' money, making sure that the shareholders did not block arrangements which were in the interests of the taxpayer, trying to make sure that somebody like Richard Branson didn't get his hold of the bank and make a lot of money out of it at taxpayers' expense. That's what we were concerned about. So for practical reasons, we argued for temporary public ownership. There are precedents for this in the United States. A bank called Continental Illinois was nationalized by the Reagan Republican administration, as it happened, and they sold it on, I think, 8-9 years later at a profit. So that was the kind of arrangement we envisaged, and that's now happened. I've no personal objection to Richard Branson, who I've only met once, and is a very likeable and flamboyant character. And he's done some very good businesses. The issue is that what effectively he was doing was that with very little of his own money, he was acquiring an extremely valuable asset worth 100 or more times the amount of money that he was putting in. And for relatively little risk, was potentially making a very large profit, and with the bank underwritten by the government. And some of us said, look, this is not on. We have a group of people in Britain who are called non-domiciled. In other words, they live here, they're British residents, but they're not, as it's called, domiciled. They're not attached to Britain because they're one parent, a father, was born overseas, or because they themselves were born overseas, and they can therefore choose a special tax status. This is very unfair because we have a group of people, potentially 5 million, though it's, I think, only 120,000 have taken advantage of it, who don't have to pay taxes in the same way that you and I do. They have to pay tax on their British income, but their worldwide income isn't taxed in the UK, and they have access to all kinds of tax loopholes that you and I don't have access to. And Ron Sandler, who I think was born in Zimbabwe but has lived here most of his life, is one of those people. And it seemed to me wrong in principle that somebody who's put in charge of protecting British taxpayers' money should have this special tax status. Well, nobody's really a winner in it because it's been a terrible mess, and the reputation of London as a financial centre has been damaged, the reputation of the financial regulator has been damaged, shareholders have lost their money, a lot of workers will now lose their jobs. It hasn't happened yet, but it's bound to happen. Who's gained? Well, of course, anybody who's been involved as a consultant, a financial advisor, lawyers, they've picked up large fees. I hope that the bank will now be properly managed and it will be sold on in years to come at a profit to the taxpayer, and so the taxpayer won't have lost any money, but we don't know, and we don't know what will happen.